Good afternoon, everybody, and welcome to this edition of Ask the Experts. It's Tuesday, it's April 26. I've just come back off a very nice 5-day break, but also picking up the pieces of my portfolio and clients' portfolios. What happened last time I looked at the markets? We were near those record highs, and then over the weekend, various events in China have conspired to, I wouldn't say crash the markets, but we're certainly seeing some sharp pullbacks in a number of sectors which we had been enjoying some really wonderful runs in as well. If you don't know who I am, my name is Capolingua. I'm the market analyst over here at Think Markets Australia, and it's my job over the next hour or so to try and make sense of it all. And if I can't do that, at least have a look at your portfolio. Okay, here we go. Unibail Group. If you're wondering what charting package I'm using, it's called Amy Broker. Why Amy Broker? It's just the one I've been using for well over a decade. It's programmable, so I can put all my little custom indicators and duvlakis on there. That's all. Use the one you're comfortable with. I'm sure it'll do all the same things Amy Broker does. Looking at the chart of UMG, which is United Malt Group up here, and the ticker code is there, we can see first and foremost, what I like to check is the trend. The trends are defined by these ribbons. When the ribbons are green, it's a traffic light system. So green means go, or we're in a nice uptrend. Orange means we're not sure. And when we're pink, various shades of pink or red, obviously we would prefer to avoid buying into the stocks. So straight away we can see that the trend on United Malt Group is indeterminate. It's orange. Not sure if it's up or down. I would probably lean to the downside because that's what it was before we got into this little area here. That's the long-term trend up the top there, and the short-term trend is generally a little bit lighter in colouring than the long-term trend. That's down here. You can see that is pretty much indeterminate as well. Then I like to look at the price actions. That's my peaks and troughs. If you're not sure what peaks and troughs are, they're the pointy bits on the chart, and I'm stylizing here for the diagram. But for example, you might say that there is a peak right there. There is a peak right there as well. That to me stands out as a pretty obvious trough, as does that one there. Okay, so generally what we like to see these rising, so higher peaks, higher troughs, indicates what I call good price action, and it indicates buy the dip activity. Okay, so when we are experiencing this pattern, we are buy the dip. Okay, buy the dip, and that's what you want to see. You want to see the market accumulating the stock that you are in or interested in. If you see this sort of price action, that is bearish price action, and what it indicates to me is more sell the rally. Investors are looking to take advantage of any rally to dump their stock, and increasingly so as we go. So what do we have on United Malt Group? Well, we actually have some pretty decent price action here. We've got rising peaks, rising troughs, but obviously the last pullback here, which has created the last peak, we don't know where the next trough is going to be, is impacting on the second from previous peak. And when we talk about price action, we talk about this idea of what is good price action, and we like to see this idea of peak to trough separation. So we want to see that this peak here and that trough there, we've got some separation that indicates, quite aggressive buy the dip activity. Because we're pushing into this range, I'm not sure how aggressive that buy the dip is. I would have said before today's or the last couple of days' moves that United Malt Group was, sort of shaping up maybe for some sort of turnaround. It was not a turnaround that I'd be interested in, however, because it's too early stages. Let's see how it closes today. So we are at this peak. This is a previous point of supply. We know as a point of supply because the price went down. So we're looking for it to act as a point of demand. And if it does that, then happy days. Our new thesis here that we're in this new phase of higher peaks and higher troughs, an improving trend because we were downtrend, now going to indeterminate. Things are picking up, okay? If we close below this level, then it's kind of all bets are off for the time being. And if you had UMG Group, you're probably in for a little bit more waiting. If you didn't have it, you wouldn't be looking to buy it anyway for the reasons I discussed. We do not have an established trend. We just would not be looking to buy this because the market's not looking to buy it. So this is my fundamental analysis tool. It's powered, the data comes in from Thomson Reuters is the company and Refinitiv Icon is the product. So they're not my numbers. These are broker consensus numbers. You can see here, we're missing obviously some numbers here because United Malt Group didn't exist up to that point. But then we've got 2020, 2021, 22, 2021 and 2020, they're historical numbers in the bag. From there, we've got forecast numbers from the brokers. We can get some consensus as well. So we can see that the consensus from the brokers is buy. There is one strong buy, 5 buys, 2 holds. The mean price target for the brokers is 469. Now, if we just come down here, you can see that 469 allows for about 11% upside from the last price, which is up here, 423. Now, that may or may not be current, depends on when Thomson Reuters decides to send me new data. Okay, so keep that in mind. In terms of my views on it, they come from some of the calculations down here, and I can change some of these items, like what I think the risk level is for United Malt Group, whether I think that the brokers' growth estimates, which are here on average, 18% for the next few years, are wrong, and I can put in a custom view, and what sort of PE comparison, what sort of benchmark PE I want to use. So the really important bits end up being EPS growth and benchmark PE. For the benchmark PE, there's a few things we can do. We can look at sort of historical. Obviously, that won't work here because it's a fairly new company. We can look at total. We can look at forecast based upon what the brokers are thinking. That's the one I tend to go to, and that's why dynamic means we can change because brokers can change. And then we've got F forecast, but I can also look at historical and other things there. Or I can type in my own PE here and go for a target. A target PE of 15, I don't think is unreasonable to hold this one to account. So I'm happy to leave that there. In terms of the broker estimates, 38%, a bit of a bounce back. Well, in fact, a big bounce back here, but then a bounce back continuing. I think they're probably a bit optimistic. I would say that there's at least a moderate risk in terms of this company, knowing its track record of actually achieving those goals. And probably a few people who own this stock are saying, no, Carl, that should really be high, because this stock has really been terrible at executing its goals. So let's just give it the benefit of doubt, go with moderate. And my model is saying that fair value is probably a little bit lower than where the current price is. So not looking like a screaming buy there on United Malt Group, and it certainly is not a screaming buy yet on the chart. If we go to Mineral Resources, we'll let this load up while we go back to the chart and have a look at MIN. Was looking pretty good up until today. Now this data is up to date, by the way, because I get intraday snapshots. It's up to date as of 20 past 12 Eastern Standard Time, and in 8 minutes I'll get another update, and I'll click that for us and we'll get the latest data. We talked about starting with trends, so it's a checklist, isn't it? I'm trying to give you a template here for how to look at charts. So we're looking at the short-term trend and long-term trend, unlike United Malt Group, and then just very quickly, just for comparison, so you can get your eye in. Look at UMG. If I'm scanning through a list of stocks, so now just hypothetically, like I'm going down a list, much like this, bang, 3, I'm just going to ignore, completely ignore. Ignore that, ignore that, ignore that, ignore that. Look at this a little bit more closely. What is that? Put it on the short list. Ignore that. Half interesting, not enough to get me excited just yet, leave it. But just giving you an idea of where United Malt Group sits in the pecking order. Now, if I go back to MIN, that would be something I would look at, because straight away, visually, very quickly, these colourful ribbons tell me it's something I need to pay a bit more attention to. Now, once I've identified that, I then might go do a little bit more analysis on the price action, the candles, etc., etc. But if you're going to look at the candles and the price action of every stock in the market, you'd never finish. So you need a quick way, just this quick way of shortlisting. I like to see the price hold in these zones. Mincore tends to do it. Now, certainly, the short-term zone, we can see here pushing prices up with some reliability when the long-term trend is strong. Okay. When the long-term trend is less reliable, for example here, that's not always going to happen. And we're kind of in that area now, because this trend, this is not a well-established trend yet. However, it does seem to be with the shadow that's coming in. So you can see that lower shadow, it's sold off, it's getting bought back in, and some demand coming in here after the gap. I'm struggling with this one a little bit because, let's face it, we've got some supply up here, we've got some supply up here, we've got some supply up here, demand's down here, kind of stuck in the middle. Is there enough to hold it if you have it? I think there is, based upon the trends, based upon proximity to support areas, both in terms of static, those solid green lines, and dynamic, the dark green zone, and potentially that this light green zone could be holding. Price action overall, I think, is fairly good. It is being damaged by this pullback. What we need to see for this one is a strong close. So right now we're 50-50 balanced in the middle. There is some demand coming in, but if we can push higher and close towards these highs, so that high there, 56.33, I think it then becomes a strong hold. I think there's absolutely no reason to sell it. Would I buy in here? I would need to see some confirmation that demand is set. Okay, so a strong close here at those highs around 56.33, and then tomorrow another little white candle coming in here. So it would look like something like this. So we're kind of looking to the future here. If I saw this close near the highs and that candle coming in, and then on this point here, I could see reason to take a position in Mineral Resources. So I'm happy to go hold. It could be a strong hold by the end of the day. Now, what are the worst case scenarios? Well, it continues to sell off. And if we see it close near the lows today at 53.63, then it would fall more into the category of, if you were long, and it's one we have been following as a long for a while, manage your exit if it closes near the low, because that would be indicative of probably a little bit more of a pullback. And, this falls from highs, enough of a supply event to take some caution. So the candle is 50-50, very indeterminate, and the position we are in terms of the technicals is just as indeterminate. Next one is ESS. This one is also for John. It was looking great until today. We are a couple of minutes away from our next update. I would say, on the basis of the strength of the trends, that we can very much hold on to this one and hold on to this one. Price action up until today, of course, today's ruined many charts. It's not just this one. We would say is pretty good. There was a little bit of compression from the nice price action we'd like to see, but that was largely caused by this pool of supply here. We did a first test of that pool of supply. That's important. So this is our point of supply, or pool of supply if you like, because it's quite significant. This is our first test. And we say that because there's a large pool of supply here, you need to trade with that supply to get rid of it. And we did. You can see the volume coming in, sort of slowly eroding the supply that is at this level, and you see kind of how much supply might be there from the amount of volume is there, and we sort of chipped away at it. Got through, was looking very strong. Today's brought us back under that zone, and really now it's all about the close. So I would say if we can close above this high here, that high there is 63 cents, so 63 cents or better, absolutely stick with plan A, which is a solid hold on this one. Closing below that peak, we're starting to get a bit cranky. Is this single candle here enough to cause us to manage our exits? And I'm going to go no on that one. I don't think so. It's not enough. Even if it does close below 63 today, I would suggest let's see how we go tomorrow. Let's wait for a confirmation that this is not just a one-day supply event. It's actually starting to build into something more sinister. Or we might get confirmation the other way. No, it was just a temporary event and we're good. And, black candle tomorrow would be obviously the first case where supply is building, and a white candle tomorrow would be, look, it was just more to do with the broader market than this stock in particular. I don't think I can give you any more than that. I think that's about the best we can do given the circumstances today. You can see the Norgate data updater alert coming up down the bottom, and you can see how the price changed. It actually pushed even further towards that 63 cents, and with a close now of there at 62.5, we're getting close to that what should be a point of demand. So old point of supply should act as a point of demand going forward. That's our assumption. Okay, next one here is from Terry. He's got DEV, which looks pretty reasonable. And given I've done a lot of foundation stuff up to this point, I can actually move through these now, I think fairly quickly. Trends would suggest a hold at this stage. Trends would suggest it's something that as I go down my list, and I know you can't see the list, it's off screen, but just imagine we're doing a scan and we're looking at these prospective stocks. That would get shortlisted. That would be something I want to keep an eye on. I've certainly tweeted about that many times. That would, might get shortlisted. That one wouldn't, unless you're looking for shorts. That is trades where you're looking to profit the downside. That one's Domain Group Holdings. So, these ribbons are these quick visual tools. That looks pretty good there. Now, of course, they're all crazy, weird and wonderful things you're seeing popping up here because I just randomly started at DEV and started clicking down. But it's giving you an idea of how important these ribbons are on that first pass. So straight away, that's a good sign. Price action is not great, not terrible. It certainly was looking better yesterday with that wonderful candle. When I say yesterday, of course, I mean last week because yesterday was a public holiday. That was a wonderful candle. And look, fingers crossed that today is more of an aberration and we get back to some of this beautiful demand that we're seeing in the system. And more importantly, it's actually some really encouraging supply removal. And the only way to get rid of supply is to trade with it, okay? And the only way you can trade with it, or the evidence that you're trading with it, comes from this volume here. And technical analysts say, oh, yeah, volume's important, but they don't tell you why volume's important. This is why volume's important, okay? And it's important at certain times. There are many times where it's completely irrelevant, okay? But there are times where it becomes really important, like here. because it speaks to us of the amount of supply removal. And then it gives us also, after the fact, the amount of supply that could be in the system and on a relative basis, how much we're actually potentially removing. Because we look at how many people got in here, we know a lot of people got in because there was a lot of volume. Hey, a lot of people got out as well. But for the people that got in, they're kind of regretting their decision to do so. And these sorts of moves, unfortunately, and you know what I mean, and you are included in this from time to time, it creates a lot of dead wood. A lot of people that bought at the top that are now just really waiting to get out, potentially for a loss or at their various break-even points. And this is all these people that we, as we go from here, this is just latent, what we call latent, not latent as in come on, the tennis player, but latent supply, right? Supply that's going to be there if they get the price that they want, which is typically their break even. So around here, there was a few people got in here, that equates to a break even point. So you might see us struggle here. Certainly we would expect to struggle here. So this is where our major point of supply. And, it starts out, it probably starts out bigger than that. When you think about it, it probably starts out this big. Sort of visualize, we're trying to visualize the supply that's up there. And then we need to test into this. So we had one previously, might have been ESS, where we said there's a test. And if you get that first test sort of into that zone, so imagine we sort of come up in here and then, get a little bit of pullback. That's okay. That's not the end of the world. In fact, we kind of expect this sort of little pullback here on this first test because we've got to deal with that. Now, if you can visualize the point of supply after that first test, well, it's not going to be as big, isn't it? It's going to be about that big. And then we might get a second test. I'm not drawing it in, but imagine second test. Now the pool of supply is that big. And a third test. And then we break through and that supply is gone. Okay. These are all the things we need to do for Devex. It's miles away. What I can say, I went off topic there, but I think it's a solid hold at this point in time based upon the supply removal I'm seeing. The trends are fairly intact. The price action's not terrible. Happy to be there. Would I buy it today? No, I can't buy it today because the candle today is pretty dreary, isn't it? But if I see another white candle like I did on, that would be Friday, I'm guessing, then I would certainly be more interested. But hey, stay tuned to my Twitter feed. And if it is something that I do like, I will certainly put it in the shortlist or as a feature chart. That's for you, Terry. Hopefully that answered all of your inquiries on that one. BossEnergy, which still looks pretty good. Again, your eye should be in now. Your eye is tuned now into this sort of thing. So straight away, it's something we would bother to pay more attention to, because it's telling us that the balance of demand and supply in the market is skewed towards a demand side market. And why would you be buying anything that's not in a demand side market? Okay. Now, having said that, we do go through other phases. For example, an equilibrium market through here where things start to flatten out. And maybe I should have drawn that a little bit to the right because you're not sure. This is probably more demand side here. This is definitely demand side here. And there's no real obvious supply side markets on screen there, I'd say. But so that's good. That's a good thing. Price action is next. So here's our checklist. So number one, trends, short-term trend, long-term trend. Number two, price action. How does it look? It's not bad, not terrible, because we have made higher peaks, certainly through here and here. These are all good. The troughs are, I'm expecting that if we make a trough here, it's going to be higher than that one. Otherwise, the troughs are a little bit indeterminate. So it's not one of those wonderful, beautiful sort of patterns like this, is it? So we can't say it's this. Okay, so look at, with your checklist, coming up with a score out of 10. And your 9 out of 10s, your 10 out of 10s, maybe your 8.5s out of 10, whatever that is. They're the ones you're looking to buy, not UMG. What would UMG score be out of 10? Is it a 4 out of 10, 5 out of 10? Does this deserve to get your money? Now, having said that, I could be wrong. And UMG might be up here tomorrow. Absolutely possible, okay? But we're talking about probabilities. UMG going to make a move like that? We'll look at UMG's history. Probably not. Okay. Having said that, we got the update for UMG. It's showing some demand in there, isn't it? We talked about UMG maybe starting to be early stages turnaround here. It's still not enough for me to buy though, because I don't think the probability is high enough. Let's go back to BOE. It's building. It's building nicely to a breakout. Why is it struggling here? Well, we've got this big bloody pool of supply here, don't we? We need to work through it, and it's going to take us a few hits into that pool of supply to get rid of it. But the good news is I think we had a really good first test here. When I say really good, then next thing I looked at that, I said, that's a great first test. White candle, $3 is generally going to be a problem round number. And then the next thing I did, my eyes went, just trying to tune your eyes in. I said, okay, that looks good up there, but, Did we see the volume confirmation down here to say we removed a bunch of this pesky supply? And I'm not so sure. I mean, that's, if we're trying to get a score out of 10, the lack of commitment here would probably just depreciate BossEnergy's score a little. Okay, this is not huge in comparison though, so it has been working over a period of time to get rid of the supply. But I like BossEnergy. It's a solid hold for me. What could change that for me? I wouldn't like to see it close beneath this light green zone. I think that's, yes, you expect pullbacks, but you don't want them to be too severe. So that low there to 21, so 34 is going to be slower, so 251. So close below 250 would be disconcerting. Okay, otherwise strong hold. Would I buy it here? I could buy it here. I mean, this candle isn't bad at all. That's actually a nice candle, and it's happening at an expected demand level. And today's candle is actually shaping up pretty well, isn't it? So if today's candle ended up being white, you could actually take a nibble, I think. If you were a bit more conservative, you might wait for that candle I showed you before. So for today's candles to kind of end up white, but then for tomorrow's candle to be one of those hollow ones, those white ones heading back up. And maybe on that candle, that's your cue as a bit more of a conservative investor to take a position in this one, because otherwise everything looks good. I won't look at BOE on the fundamental analysis tool because it doesn't have any earnings. That one was for Roberto. Now, this one is from Narius. Welcome, Narius. You're new to the session. ETHI, the Betashares Global Sustainability Leaders ETF. Okay, wonderful. Now, unfortunately, Narius, it's not looking like something I would pay a lot of attention to. Okay, now this isn't to say that the stocks in these ETFs aren't bargains. Okay, they could be bargains. They could be bargains. Hey, I don't know. My opinion of are they bargains is who knows, and really who cares? Who cares? Because right now the market doesn't care. The market's view of the stocks in this ETF is that they're not bargains. Because I tell you what, if the market thought they were bargains, the price wouldn't be down here. There's two elements of demand and supply, right? You've got demand is just people with money. Okay, that's what demand is. And then you've got supply. Okay, which just equals people with shares. Okay, so always consider when you're looking at a chart or considering your investment what the people with money are doing. Okay, are they falling over themselves to buy this thing? Are they saying, you know what, this money that I've got shouldn't be in the bank or in a term deposit or in another stock, or in a bond or in NFTs or crypto? This money absolutely has to be, hands down, in ETHI immediately, right now. I can't wait. Or are they saying, you know what, I've got plenty of time. I've got plenty of time to buy this ETHI when the macroeconomic conditions improve to make those stocks look really attractive. That's what the people with money are saying. They kind of ho-hum on it. So I'm ho-hum on it. I say, who knows, who cares? I don't care because demand doesn't care. Let's look at the people who already own this. Okay, they've been sitting in this for a while. Are they quite willing to sell? Are they quite loose with their shares, letting them go when they're nervous, or are they hanging on to them? Absolutely confident in the knowledge that these shares are bargains, because that's the only reason why you'd hang on. And for me, I look at this and I say, no, they're actually pretty happy to sell right now. There's nothing really there sort of holding them back. So if the people who own this particular ETF are saying, look, any chance I can get out, any rally, I'm looking to sell, and the people who have money saying, well, I'm not buying it, you have to wonder what your logic is as to thinking why it's something wonderful, because your logic and your thinking is at odds with the market, and that can be very dangerous. So I think I'm going to skip past this one. I don't think I need to say anything else. We've talked about trends, we've talked about price action, a lot of black candles as well, which indicates a lot of supply in the market. So I wish I could give you better news on that one, Naris, but this is just my point of view based upon what I can see in the charts, isn't it? Peter, welcome Peter. BBOZ, very interesting. This is a bear fund. Okay, so this is about shorting the market. Well done. Think about this for a second. Think about the logic here. Are you really asking me whether it's time to buy BBOZ, or are you really asking me whether it's time to short the market? I think that's what you're saying. So I think let's not look at BBOZ. Let's look at this one here, which is the S&P ASX 200, because let's face it, BBOZ is going to move up or down based upon whether this thing goes down or up, respectively. Now, this thing is pretty strong. We've learnt enough to say that this trend is okay. This trend is okay. And I only say okay here because it's not well established. Well established is kind of from here, okay, because we've had 3 months of trend. Here we've had maybe a month of trend. So we're still tentatively in this bullish phase here. But look, as long as we hold this, and I put out a tweet this morning with the key levels there, and it was 73.05, I think I put, so you can see down the bottom there. I can't move my mouse now because I'll lose my data window, but down the bottom, you saw 73.0, whatever it was, 73.04, which I just rounded to 73.05. So as long as we continue to close above that, I think this trend is intact. If we close beneath that, and that is a real possibility with the crazy stuff going on in China right now. Let me show you that, because this is to do with BBOZ. And I'm sure we're not wasting time here, because I'm sure many people want to know what the hell's going on today, Carl. Why are we dropping like a stone? Well, it's because this thing's dropping like a stone. And it's because, well, whether we like it or not, I'm going to flick back here. This thing, which is the Australian stock market, whether we like it or not, is heavily influenced by this thing. And as well as this thing here has done, because these things have gone up really well, the material sector, and you can see what's happened to the material sector over the last 4 trading sessions, it's largely to do with this thing. So the bit that was really holding our market up is now getting shellacked because this thing is coming down. Why is this thing coming down? We're talking about the ShanghaiComposite. Well, check the 6 o'clock news. You don't need me to explain why there are concerns about the Chinese economy at the moment. So that's what we have to deal with. And it's tough to give you a firm reader on that because the situation is dynamic. All I can say is above 73.05. I think we're a hold here. We're a hold. Are we screaming buy? Not really. I would have said if we closed above 76.33, we were on our way to the races. Until then, we're in this developing 1-month-old long-term uptrend, and we needed more information. So cautiously optimistic, I think, is a word that I've used many times in the media. Hopefully that satisfies your requirements there, Peter. I know BBOZ is not exactly what we talked about, but I think we got there. Next one is for Andrew. This is LRV. And I do remember this one last week. I said it looks fantastic. How's it go? Well, it still looks fantastic. It still looks fantastic. Well done, Andrew. And today, look, impervious to attack. Not surprising that there's a little pool of supply here, 50 cents. It might take a few days to get through that. But otherwise, what a wonderful trend. Is there a long-term trend? No, there's no long-term trend because it hasn't been around in the long term. It's a fairly new company. It's it's literally, that's all the data we have. So it's been around. What date is that there? Since the 6th of December. Okay. What do they do? I'm pretty sure they're a lithium stock, Andrew, and I'm sure I'll get you a confirmation as I scroll down the list. I won't know till I get there. But anyway, look, I think what Andrew is asking here, he knows the drill. Should we manage our exit? And it's a rhetorical question because I think Andrew knows that he doesn't need to manage his exit yet because there's no major sign in the market that people are panicking. So the people who own the shares, think about what they're doing. Own these shares. What are they doing? Are they panicking? are they worried about the fact that the Chinese yuan has tanked? What's the Chinese yuan? Hold on, let me show you. This will also illustrate why our market's so rubbish today. There you go. That is the Chinese offshore yuan. So it looks like a big move, but really we're only going from 1565 to 15. It's about 3% move. But 3% move for a currency is substantial. 3% move for the Chinese currency is even more substantial because typically the Chinese government likes to keep pretty close wraps on this thing. So when you get slips like this, it does rattle markets. And does it rattle markets for a long time? No, it tends to rattle markets more in the short term, assuming some of the things that caused it go away. But are we sure that those things are going to go away? What would be interesting, let's do this. We are so far off topic now, and either you're screaming at the screen going, hey Carl, just shut up and look at my stocks, or hey Carl, no, actually, let's see what happened here. What happened to the Aussie market? What happened to the ASX 200 here? Because we might get a bit of an insight as to what happens this time around, isn't it? So let's go back. So we're looking at the period between, say, 15th of June. So let's call it June 2018, and maybe there. So June and August 2018. So let's go back to the Aussie market. Let's go back. So that's obviously COVID. What was the market doing between June 2018? So it's here and here. And look at that. Our market actually really didn't flinch the last time we saw as big a drop in the Chinese currency. So it might give you a little bit of heart to say that, well, maybe we'll be able to shrug this off before too long. Okay, I'm not sure what caused this. Okay, I'll have to go back and try and remember. But anyway, for now we can say that hopefully there's not too much impact from that one. LRV is an absolute hold for you, Andrew. No reason to manage your exit because, as I was saying, what are the people who own it? Are they panicked? No, not at all. What does that tell you? If they're not panicked, why should you panic? People who have money, are they still happy to buy it? And even in the face of some crazy things on the market today, actually they're still happy to buy it. So all good there. And always frame. You kind of don't need me. And if I've got you to the point where you don't need me, I've kind of succeeded them. Just always look at your holdings in terms of these two things, and you're probably fine. You probably don't need to ask me questions. MCY is the next one. Okay, can do this one real quick, can't I? Don't like that, don't like that. You know, we're seeing some holding of demand here, but it's got to do some things. I'll tell you what it needs to do. So it needs to get above here, okay, at the minimum, and it would need to do it in a fashion that kind of resembled this, okay? If it started to do this thing, right, here, then I could get more interested in it, but not until then. Let's get moving. That one's for Deborah. Now, this one is for Peter. He's got CXO, which looks good on the basis of this is good, this is good. So 2 thumbs up. As I'm scanning down my list, certainly something I would pay closer attention to. Okay, a little bit of history for Peter, because he hasn't, I think he's new to the sessions. We did say over here that we would be looking to minus 1/3 of our holdings. In last week's update, I'm pretty sure we covered this one. Now, somebody can correct me if I'm wrong, but we did say that somewhere around here, you might get another signal. And if I wasn't around, at least you know what to look out for to exit your holdings. That candle's probably not devastating, but the two of them is probably enough to do it. And then maybe we're just hanging on to see how we go here with the rest of it. So the problem is now that these two together create quite a bearish pattern, these two peaks. All is not lost. I'm just giving you an idea of the psychology of whether I'm looking at this chart and going buy or sell, okay? And I might be contradicting some of the things I said earlier, but certainly this gets us on the list, yeah, of buys, and then we do the closer analysis and we say, well, potentially supply is building. So ask yourself the question: is supply building, or is it diminishing? Okay, and if we get these lower peaks like this with the candles that we're seeing, it looks to me like supply is building. What about demand then? It's okay if supply is building if demand is building to an even greater magnitude than supply is building. Think about it. Supply is building is not the end of the world as long as there's even more demand building on the other side. Okay, well, let's assess that now. Let's have a look at some of our price action here. Certainly, this is a wonderful, wonderful candle there. We saw a pretty good one come in on Friday, but notice it's smaller as well. Notice how much smaller it is in this one here. Today's candle is commendable. Like, I don't know, what's the right word? It's strong. You know, it's a good candle in the face of what's happening on the market. Is demand building? I can't say. I think it's too early for me to tell at this stage. What I would be really interested in seeing is how we respond here. So let's see tomorrow's candle, okay? Let's see how we go tomorrow. If we get something like this, okay, and the great thing is you don't need me to tell you. You'll tune in tomorrow and the market will tell you. The market's always talking to you, okay? You just need to listen. You just need to tune your ears in and know how to listen. So if we get this candle tomorrow, right, that would tell me that demand is actually still building and therefore it's still a hold. If we saw something more sinister, however, okay, and we saw something like this, so let's get rid of that, and we saw this, okay, so not the white one, but the black one. If we saw something like that, then I'm now starting to get really concerned that supply is really building in here. And I would say that on a break of this low here, this would be your final exit point. Okay, now if you haven't already done your minus 1/3, I'll let you decide how you treat this. But for listeners of Ask the Experts and followers of this methodology, I would suggest that a break of that low there, 121, so close, so not just a tickle. Okay, a tickle would be, say, a lower shadow into that zone, but a close, a decisive close beneath that low, so 120 or lower, then we would be exiting the final third and we'd be done with CXO until the next time it becomes the shiny new thing that punters are looking to punt. And we love punters, we love them because punters create price movement and they create this stuff here. Okay, and we need them to get going. But we also don't want to be hanging on too long, because there are way too many stocks out there that, whilst they're shiny and they're new and people can make a case for them going up forever, for example, this one through here, we do sometimes get to the point where that supply does start to build and people tend to move on to the next new shiny thing in the market. And we don't want to be the one left holding the bag, being bitter. Remember what I called them before? We don't want to be deadwood, okay, waiting for our next opportunity to get out. Okay, so just be careful with these. Some people get really angry with me. Some people are so parochial about these lithium stocks and how they're going to go up forever, and they get really furious when I even indicate that that might not be the case. So just be careful. I think you want to have an exposure here because the trends are still very strong, but I think you want to be very cautious about the building supply. Now, here's the thing. I'll tell you what, if I am wrong, and I hope I'm wrong, by the way, I hope this goes, because I just want things to trade, and I don't care what they are, and I honestly don't care what they do. I just want things to trade. And when they're going up real fast, that's the best time to trade them. So, I hope I'm wrong, and I hope that we get a candle that's proportionally, that's this big. Okay, I'm not sure what you'd call that candle, but it's a big one. There we go. So let's hope we get that candle there, and I'm completely wrong. And if that's the case, then I start to look to get back into it. It won't happen all in one day, of course. It'll happen little bit by little bit, and I'll get the signs. I'll get all the signs I need in the world to put my money back into CXO for the next run and the next run and the next run. But for now, I think I'm just being very cautious on this one. Hopefully, Peter, that answers your question on that one. He said he sold. Actually, should have read his message. He sold at 150 from 4.5. Well done. I don't think you need to buy them back just yet. From Terry, could I review LMG? I won't look at CXO on the fundamentals because it doesn't have any. Very quickly here, a bit flat, not exciting enough for me. I know we looked at it around here and we said it's starting to look interesting, but I think we also said that we needed a bit more confirmation before we got really excited. We haven't had that confirmation yet. In fact, if anything, it's looking a bit sketchy here. Is it enough to hold? That's tricky. I'm going to take the easy way out and maybe abstain from that. Maybe there's just enough to hold. I don't know. I think if I had money in here, I'd want to find something better to do with it. That's all. That's my opinion. I'll leave it up to you to decide. Looking down the list, this is one's for King. Welcome back, King. Iluka. And I say, because it's so disappointing, because, gosh, it was looking good here until the China thing unravelled. And, again, I can't see the future. I don't have a crystal ball, so I don't know these things are going to happen. I apologise. And, if you asked me on this day here, if you said, Carl, and maybe you did, maybe you're an RC expert, and you said, Carl, what should I do on that day? I would have said, look, it looks fantastic. I can't see any major reason to sell it. There's a little bit of supply there, but it's not a huge thumbprint of supply. It's not just this clear, you have to get out now, a moment. So right there, I would have said, look, hang on, it's a strong hold. Unfortunately, again, I don't know the future, so I couldn't predict that this was all going to happen. Where could you have said, well, it's not looking as good as I would like? I think this candle here is pretty dodgy. See that one in there with the upper shadow in the zone? But even then, I probably would have said, well, hang on, because it's everything is still very good. And, again, I can't predict the future. What do I say now? I think there's enough to hang in there. I know you're going to think, well, why did I trust you last time? I think there's enough. I think this is enough here of an uptrend, and it's so well established. And I could be wrong. It could do something like this and then keep going down. I don't know. But all I can say is demand versus supply. I still think we're in a demand side market. I'd hang in there on this one. I wish I could have given you advice with more foresight previously. Okay, but the evidence suggested hang on there. Actually, I should have said, King said he doesn't hold it. He's looking for a possible long-term entry. Okay, that changes the question a little bit, King. I should have read that. What you need to see, and I think you know what we need to see from here. We need to see some of these. And if we see these, then you're right. Then, buying a pullback into this zone, I think makes a lot of sense. But wait until you see those. Next one is for Gary. We've done CXO Gary. So Grange looks very good. Are these supply events here? Are they supply events are big candles in their own right. Maybe you get some confirmation on the next one. None of these, in my opinion, are enough to tell me to get out. So if I say, should we manage our exit? I'm going to say no on this one, just for now. I think there's enough in it to hang on to it. I think this is all very good here, and this is all very good. And if we look at the number of white candles compared to black candles and how big those white candles are, it speaks to me of accumulation. It speaks to me of buy the dip. And where do we tend to buy the dip? We tend to buy the dip at those old peaks, okay, when we have new troughs. And I'm thinking that maybe we're getting a bit of a trough forming here, even with that lower shadow. So I would definitely stick with this one. Would I buy it? I can't buy it just yet because of the uncertainty that's around. But I'll tell you, if you see that candle, then absolutely, I'd be looking at this as a buying opportunity. What would make me feel even better about this is if we saw today's candle. You can see today's candle is developing there. If we saw this push up and we ended up with today's candle looking a bit like this, okay, or even if it had a little box on it, so something like that, okay. So if today's candle looked like that, and then you got that follow through tomorrow, that's your buy signal. Okay, HIO, which is another one of our Twitter favourites, and that's hung up really well. And I guess many people are probably on this. If you've been following me on Twitter, do we manage our exit on this one? I don't think we need to, and it might be famous last words, but I would give this a little bit more time. This candle here is not fantastic, but it's still on balance, showing plenty of demand. This candle here is wonderful, and that's Friday, and then you've just got this candle here, which is pretty bad, but look how bad the rest of the market is. So I think all things considered, this thing is amazing. This is incredibly strong. This is incredibly resilient, and I think that was the word I was looking for before. I can't see any reason to sell this, and I could be wrong, of course, but just what I'm seeing here, balance of probability, I think hang on to this and see what else we can get out of it. Now, if you do see this candle develop into a big black candle, that could change my opinion. If we did see further black candles, and unfortunately you would be giving up some profit, but I don't mind giving up a bit of profit to make a lot more profit down the track. So I'm okay with that one. I think that's a solid hold. Andrew says, looking at CRR, which has just turned green on the day. This looks good. I like this. I think this is the best chart we've seen today. Okay, this is the best chart without a doubt that we've seen today. I like this. So we've got obviously that and that, so it gets us on our shortlist. So to start off, we're looking at it. We're not ignoring it. This is great. Supply removal through here. Well, this is disappointing, but hey, you get them. You get them from time to time, and the comeback here and here is fantastic on a really bad day. Would I prefer if the price action resembled this a bit more? Of course I would, because we are pushing a little bit into, well, not more than a little bit, aren't we, into that drop there. That's the only thing that's holding it back. Otherwise, it's getting really high up on our scale of 10. You know, and I'd go 8.5, 9 out of 10 even on this one. Should we expect? Now, where can we get to? Well, there's a pool of supply there. So if we're going to buy it at 10 and think we're going straight to 20 or 30 or 40, that's just silly, because we're buying it at 10 and we're expecting a bit of trouble here at 14 as we work through that pool of supply. But hey, it looks like the interest is there. I really like this one. So that's the best one today. Strong hold, yes. Buy. Actually, I'm going to go buy on this one. That's, I think, our first buy today. Thank you, Andrew. Andrew always brings great charts to my attention. URW. Pass for you, Anonymous. I don't need to say any more. If you're unsure why I passed on yours and didn't say any more, go catch the recording, because I've talked ad nauseum about what excites me, and this one does excite me. This one's from Helen. Now, Helen, I set Helen the challenge last week to find a really interesting turnaround chart. Hasn't done it for me this week. That's not a turnaround chart. This one just looks great, fantastic, amazing. No complaints about this one. So Helen's comments, do I think it could continue past 260? Yes, I do. It looks wonderful. Or will it continue to consolidate? Well, hey, again, I don't know the future, but I can tell you the candles look good. There's a few black ones in there, but otherwise lots of white ones as well. Lower shadows through here, lots of support through here. All I see is demand. All I see around here is demand. I like this one. I'm happy to own it, Helen. This one's from Ken. And now, what are we looking at here? MNS. Yeah, okay. This is one I've watched very, very closely since I covered on the call on AusBiz. And I do like the company, but I've been waiting for a good time to buy it. I haven't really seen it. Fortunately, it could be consigned to that Novonix basket of not shiny, not new, and not interesting enough for people to look at. Lots of black candles. In fact, that is probably the most striking. Would you agree that is the most striking feature of this entire chart, is the ratio of black candles to white candles. And think of what a black candle means. To get a black candle, let's say that's yesterday's close, right? Right there. To get a black candle, well, you don't have to, but anyway, let's stick with this analogy. If you let's say you open there today and then you head back down. Anytime you open up and head down, you're creating a black candle. So sometimes, even if the share price is going up, this selling is persistent and pervasive in the system. And then we've got lower peaks, lower troughs. The only redeeming feature is the fact it's holding that. If I had it, I'd be very concerned. Okay. Is there enough to hold it? Not if you want to make more money really soon. If you don't want to make money really soon, then you're okay holding it, because I don't think you're going to make a great deal of money in the very, very near future. Not to say that can't happen down the track, because we're still long-term uptrend. What we would need to see, okay, to get this into the right place for you, Ken, we'd need to see some of this stuff. It's telling me that demand is coming in. White candles, short-term uptrends, all these things need to happen. Until then, I'm a pass on that one. Ken has given me lots of information on what the company does. Thanks, Ken. But it's not helping the chart. Okay, I tell you what, you know all that stuff. Guess what? Everybody else knows that stuff as well. You're not the only person in the world that figured that stuff figured out all the stuff you put in your message. Everybody knows that, and yet, having known all those wonderful things, it doesn't look like they want to buy it. What does that tell you? That should make you really nervous if you're a true believer in this stock. We've looked at Mineral Resources, NewHopeCorporation. The market likes this one, but I think the market's starting to get a bit nervous, don't you reckon? Don't you reckon that all of this together, all of these are adding up to, I'm not so sure. So I think we are in the camp, and I'm pretty sure I've said this, of minus a third, just to get some profits off the table. But I think we've also said we want to keep some skin in the game. And I still think we can keep that skin in the game. I'm getting a bit more nervous about that thesis, though. I don't want to see a close beneath this low here. That low there is 321, and we're tickling it today, aren't we? What's that low there? 321. Don't want to see it close below that level. That's starting to get me a little bit more nervous, and I might even take a little bit more profit on that one. Okay. For now, I'm just going to go hold, but you know what to look for. Next, there's takeover offer on ESS. I didn't know that. Peter, thank you. I'll go and look into that after this session. Bet is another stock I looked at on the call, and I thought this stock is crazy, crazy cheap. And I said, as cheap as this stock is, and as much as I love it, I can't buy it because the chart's not going up. And that call is absolutely correct. Having said that, a little bit of a deal going on here. Maybe is that some takeover talk there, Ron? I don't know. Haven't seen it. I've been on leave. I've been on holidays for a few days. Looks very interesting. I'm going to do some research on this one. I'm going to say there's enough to hold it now on the basis that something's up here, something weird is going on, and I need to do more research. I can't buy it just yet because I'm not seeing really wonderful white candles, but I'm going to go do some more research on that. Maybe ask me about it again next week, Ron, and I'll be able to give you a more informed decision. For now, on the basis of the chart only, it is a hold. Roberto asking, is volume as important as it once was? Volume just as important as it always has been. He's asking in light of algorithmic trading. Algorithmic trading is still trading, it's still buying, it's still selling, it still creates volume, and it's still part of supply demand. So yes, I still believe that volume has a very, very high place in any technical analyst toolkit, but is one of the most misused ones as well. Going through the list, Jack, PLS, of course we can do that one. Let's have a look. Pilbara is one we've also been quite bearish on. You know, this is not a great signal here. Is that enough alone? Yeah, look, I think that's enough alone to go minus 1/3. I know it's hindsight, and shout at your computer screen if you like. I can't hear you, but I think on the basis, and just as an educational tool, all right, just on the basis that this nasty candle is occurring so close to what we know as a point of supply, and maybe not that one, but certainly the follow through the next day is not great with a little gap. See that little gap in there? So if you didn't do it on that day, and I can see why you might do it on that day, I think that day there is really nasty. I think this day here, and I'm just going to go copy paste. I know it's all hindsight, but if it helps you next time, that's okay. I'm going to go this day here is really nasty as well. So that probably constitutes a sell. And then the next clear one, in fact, I think you'd be out of this. I can't see any reason to still be in this one. It's just ask me each Tuesday, that's all, and I'll give you these if I can. But that one there, and certainly if not that one there, is the all out. After those, I can't see any great reason to still be in this one. And I certainly can't see any reason to be in it now. So if I had it, I'd get out. That's just me. And that low there, it's probably pretty decisive. That low there is 256, so close to 255 or worse. And it could be a very slippery slope from here. Why is Pilbara not doing well? Because it's a lithium stock, and we thought that lithium stocks were going to go up forever. Unfortunately, Pilbara is not the shiny new thing that it once was, and that's why it's not doing well. People taste shift and change and things get overvalued, whether we like it or not. What would be a good level to get in at, asked Jack. I can't see a level to get in at. I'm not looking to buy Pilbara at this stage. Sorry if that disappoints you, but it may change. And how it would change, we've talked about the price action you need to see, Jack. We've talked about the types of candles you need to see, Jack. So you've got the cues there, and on the day that it gets up to 10 out of 10 on your checklist, based upon what I've taught you just in this session, that's when you know there's a good level to buy, and not until then. Should I be buying this one? Well, hey, you know what? It's tempting, isn't it? It's tempting. Bottom of the range. What we're looking at here are all the material, all the stocks in the material sector, right? So that's hard. It's hard to say because BHP swings it, Rio swings it, Fortescue swings it. What should we do? What should we do with this one? Is it a hold? I think there's enough in it to hold it only on the basis that this is still there, but it's tough. It's tough to say. I think I'm going to abstain and say, look, I need some more candles. This is a big whack. I didn't expect to see this. So I need a few more candles to get a better idea. And what those candles would look like. So how I'll know, right? So what I'm looking for now, when I see these supply events and I miss the exit, the next thing I'm looking for is what happens next. All right, so I'm going, okay, how do we respond? How do we respond right about here? See where that light green zone is? How do we respond here? What candles appear in here? Okay, now if I get a bunch of white candles in here, I tell you what, we're fine. We're fine. Absolutely hold, maybe add some more. If we get a bunch of black candles in here, then I look, it's almost just all out at that point, isn't it? Because it tells me supply is building. And if I'm buying something and I want to make money, I need supply not to be building. I need supply to be diminishing. I need demand to be building. So I'm looking for those signs in the market. So I can't do a lot about that one right now. James, again, sudden move, I need more information, but at least I'm giving, if you don't tune in next week, for example, at least you'll be able to spot on your own how to deal with that. QPM, this one here is for Narius, and I think there's enough in it to hold at Narius, but only just. Now you should, even if this is your first session, but I reckon in 1 hour of me teaching you some stuff, I reckon you should be able to decide on buy, hold or sell here, because give this a score out of 10 on your checklist. And I reckon at best we could, let's go 5.5, be generous, all right? There's some good stuff happening there, but there's not enough good stuff to get really excited about it. Okay, I'll be back next week. Okay, if you didn't get your question answered or you want more of these wacky diversions, tune in. That's where you register. If you're watching me on YouTube and you don't know how to get access to this, you can tune in live as well. If you are not a client of Think Markets, you should be, because we are the good guys in terms of Aussie share trading. We've got all the products you need to trade. We're CHESS sponsored, a really low rate, especially if you're still trading with CommSec. The number of people still trading with CommSec, I cannot believe it. Come over to us and pay a fraction of what you're paying over there. And our customer support is something we pride ourselves on. You can ring up and speak to us, and you get my analysis as well. If you're new to Think Markets, here's a bit of an incentive to come over, and that's worth a lot of money there. If you're paying whatever you're paying at CommSec, 10 free trades is an existing offer. Say that you saw me on Ask the Experts and you get a bonus 10 as well. If you're already a client of ours, I know you've seen this one before, but don't forget to refer some friends and we'll give you a bunch of free trades as well. If you are watching on YouTube, make sure you hit the subscribe button or the bell icon and the thumbs up button as well. Let us know you like what we're doing, so we'll continue to do it. Other than that, it has been a pleasure chatting with you today. All the best for your trading and investing until we catch up again. Bye-bye for now.